Good morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about how to estimate your quarterly taxes if you're a small business owner. For profitable small businesses, paying quarterly estimated taxes is part of the tax process to potentially avoid penalties at the end of your fiscal year. The quarterly taxes for businesses are the estimated taxes that will be owed at the end of the year, or in some cases where businesses may see ebbs and flows, it may be based on the taxes they would owe based on each quarter's profit. So getting started, before estimating your quarterly tax payments, you must gather some information. The types of information that you will need to complete your estimated taxes will depend on whether your company is a pass-through entity or a corporation. Some of the items you are likely to need to include are your total personal income, including dividends, pensions, etc. Your estimated business income for the upcoming year, which may be based on your previous year's earning. Your estimated expenses based on last year and expected increases, and your calculated self-employment tax, if applicable to you and your business. Calculating your estimated taxes. There are a couple of ways that you may calculate your estimated tax payments. If you're not as confident or comfortable with tax matters, you may want to ask your tax preparer to run an estimate based on your previous tax return. If you know your numbers well and have completed your tax returns before, you may feel comfortable filling out Form 1040-ES from the IRS to calculate your payments. A final option to consider if you're using small business tax software is running out estimates when you prepare your return for the year. These estimates will be based on your previous return and deductions, and you will likely have in the upcoming year. And then you want to start making your quarterly payments. Once you have completed your 1040-ES form, you enter the payment amounts for each quarter on the blank vouchers and mail them with your check to the address listed on the form. If you're set up for payment in the electronic federal tax payment system, you may enter your information and payment directly online. This is an excellent option as it confirms payments immediately. Payments are due 4 times a year, and they need to be postmarked by the following dates: April 15, June 15, September 15, and January 15. It is important to note that if you end up having a more profitable year than expected, you always have the option of increasing the estimated taxes in the next quarter. The taxes paid do not reflect the same amount each quarter, and making sure that you pay enough is important. So ultimately, you will want to pay enough each quarter so that you do not owe any taxes or only owe a small amount by the end of the year. The main way to work towards this is by paying 110% of the taxes you estimate you may owe and then applying any overages to the next year, tax year. If your cash flow is a little tight and you do not expect to make as much money this year, you may go as low as 90% but could potentially face an underpayment penalty. If you're on track to make the same amount or slightly more, then 100% of the previous tax liability should put you in a good position. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you all next week.